Ladies and gentlemen, welcome to the Social Enterprise Summit. Today's topic is Achieving Net Zero, Unlocking Private Capital and Mobilizing Resources for Success. I'm Judy from our Hong Kong Foundation, and I'll be the facilitator for today's section. The need to tackle climate change is more pressing than ever. A lot of countries have committed to achieve carbon neutrality or net zero emissions in the next decades. So how do we achieve net zero? Today, our panelists will bring wide-ranging experiences and insights from their respective fields. Firstly, we have Mr. Anthony Zhang, Board Governor and Convener of Green Finance, Friends of the Earth. Next, we have Professor Christine Low, Chief Development Strategist, Institute for the Environment, Hong Kong, USC. She's also former Undersecretary for the Environment of Hong Kong. And then we have Ms. Chue Wan Fan, Managing Director, Chief Investment Officer for Asia, HSBC Private Banking. And then we have Mr. Sam Tang, Advisor of World Green Organization. Last but not least, we have Ms. Grace Hui, Head of Sustainable Finance, Hong Kong Change. So before we dive into the discussion today, we have a question from the panel just to know more about our audience. So would you please raise your hand if you have an idea or like, let's do it this way. If you are completely new to the idea of net zero or carbon neutrality. Thank you, that's great. So I think most of our audience are not completely new to this concept. So today, we will explore how to unlock private capital and mobilize resources to transform pledges to plans to reach net zero targets. There will be 2 rounds of discussion today. The first round will focus on the current situation, what's going on right now. The second round will explore the way forward. How do we achieve net zero? And after that, we will open up the floor for Q&A section. Without further ado, let's get started with the first round of discussion. Let's start off with the public policy perspective. So the government has recently released Hong Kong's Climate Action Plan 2050. And one of the main targets is net zero electricity generation by 2050. And also just a couple of hours ago, there are more than 40 countries that agree to phase out coal power at COP26, which is still ongoing right now at Glasgow. So Professor Christine Low, would you please share with us the implication of this net zero power commitments or its impact on this natural resources market?
Well, I think the impact, if we're looking at the world, or if we're just even looking at China, it's going to be tremendous on the natural resources market. So the natural resources market, of course, is more than just energy, because industrialization and so on requires a lot of mining, a lot of drilling, a lot of raw materials all across the world. So for countries to have pledged to not use coal, well, basically it's going to be over a number of years. They're going to ramp down the use of coal. But of course, they have to ramp up other energy sources because otherwise they won't have enough energy. So this change from using coal to lower carbon emissions fuel. So the transition fuel is going to be natural gas and using less oil. This in itself will be a huge shift in the natural resources market. But also the tech revolution, there's going to be a lot of mining for things like lithium and so on. And we can also look at the number of countries where they have different types of mineral resources. So then your question is, what is that going to mean to the resources, the natural resources market? Well, the answer is tremendous. Exactly how it's going to go, people are kind of guessing, and of course, investors are thinking about what they're going to put their money in, longer term, shorter term. And then, of course, you have, for example, even in Hong Kong, you have the Hong Kong Monetary Authority already saying to banks, so they regulate banks, that the banks have to report on their carbon risk. So the carbon risk of the banks is not just the bank itself, but also their clients, because that is the portfolio of the banks. So that means the banks are going to go and ask their customers for their risk profile related to carbon. So that means all their customers are going to have to start measuring their carbon footprint and to think about how to measure it and then how to reduce it over time. So you can see that this is actually going to be a tremendous change. And you're also seeing this kind of change in other parts of the world. So the world is going, first of all, into measuring all kinds of things that they didn't measure before. Secondly, is to make sense of what that is and how they're going to then work with their supply chain, up and down the supply chain, in managing not just their carbon, but actually many other environmental impact. So this is going to be a kind of complete revolution. And perhaps at this early stage, I'll just end by saying what China has done, because of course we're in Hong Kong. We are the international finance center and the green finance hub for China. And China has just come out just since the 24th of October with a whole series of new guidelines, a new white paper, new plans, which represents what the Chinese government calls a new development philosophy. In fact, it is a revolution. So what China is beginning to lay out is actually quite a thoughtful and quite comprehensive view from decade to decade, how they are going to turn the Chinese economy, which is huge, and China is the largest industrial economy in the world, how they're going to transform from where they are today in energy, in how they manufacture things, right for the next 40 years. So as you asked, this is going to be a tremendous impact on the natural resources market. So I would imagine people who are in mining, people who are in energy, people who are in industry, petrochemicals and so on, all have to start thinking about what the Chinese new policy is going to mean. So coming back to Hong Kong, for us to sit here in Hong Kong, being a finance center, and also having some aspirations in our technology, in reindustrialization and so on. So we must bring these kinds of ideas into Hong Kong and examine what are some of the things that we're doing here locally to make sure that they're aligned with these huge changes that are coming. So one very quick example. For example, the chief executive has talked about the development of the northern metropolis. So this is the bit of the new territories that bothers Shenzhen. So there's all this discussion about how that's going to develop. But let's think about it from a net zero point of view. Well, the first thing is, if we're now building new things, new infrastructure, obviously the first thing you need to think of is sea level rise for both Shenzhen and for Hong Kong. Now, when you're thinking about sea level rise, what kind of technology and design and so on are you going to use, right? I don't have time today to go into some of the funkier ideas, but there's a lot of cool stuff that we could be doing. Secondly is, obviously there's going to be a lot of other infrastructure, a lot of buildings and so on. We know there are going to be technology parks and so on, but how are we planning them? Well, they got to be, the thought's got to be net zero from the beginning. Net zero is not to be achieved in 40 years. Net zero, we have to start designing them, choosing the materials we're going to use, how we're going to use this infrastructure right now as we're developing them. So I'd say very, very exciting, but we need to think holistically. We need to be very ambitious, because I think Hong Kong can do it. And, we can raise the money here to not just do the things that we're going to do in Hong Kong, but of course, nationally, we have the Greater Bay Area, which gives us a lot more latitude, but actually Hong Kong is the fundraising center for the whole of China itself. So thank you.
Thank you, Professor Low. Thank you. Grace, I know you co-chair two work streams for the Green and Sustainable Finance Cross-Agency Steering Group established by Hong Kong MA and SFC. So would you please tell us more about the steering group's work?
Thank you, Judy. Good afternoon, everyone. I'm very pleased to be here with my esteemed panelists. Just now, can you not feel the energy and the passion coming out from Professor Low? I mean, I probably met her probably over a year ago now. And, you know, she has never stopped, you know, being very generous with her ideas, with her help, with her network, with her connection. You know, she really has given me a lot of power to do the things I want to do. And for somebody who has to go through 2-3 weeks quarantine, I guarantee you that's not going to be easy. But she did it. She did it because she has a passion. And I'm sure all of you are here today. Many of you are spending the Friday afternoon with us. And I can see Ada at the back, who is in the education, being very quiet. You know, seriously, in the space of, you know, sustainability, climate change, you know, we owe a lot to Professor Low. So thank you, Professor Low. So for the cross-agency steering group, okay, I think it's a very good question. Why is there cross-agency steering group? I think it's because policymakers, asset owners, asset managers, investors, insurers, and financial service providers, we must all work together to redirect capital flows from unsustainable to sustainable projects. It also requires a better coordination between these finance players, financial supervisory and regulatory bodies, and those in charge of environmental policies. I think that was a very good tip that I got from Christine very early on. So in Hong Kong, we are very fortunate that we have the Hong Kong Monetary Authority, as well as the Securities and Futures Commission, that decided to form a cross-agency steering group with exactly the stakeholders I just mentioned, in order to coordinate the management of climate and environmental risks to the financial sector, accelerate the growth of green and sustainable finance in Hong Kong, and support the government's climate strategies. So apart from the two statutory regulators, the other members include HKEX, which I represent, the Environmental Bureau, the Financial Services and Treasury Bureau, the Insurance Authority, and the Mandatory Provident Fund Scheme Authority. The steering group has been running for almost 19 months now, and a number of concrete steps have already been announced as a result of such great collaboration and coordination. In December last year, the steering group promulgated a strategic plan which sets out 6 key focus areas for strengthening Hong Kong's financial ecosystem to support a greener and more sustainable future in the longer term. And, if I can turn the page, agreed to implement 5 near-term action points. And in July this year, the steering group announced its priorities to focus on climate-related disclosures and sustainability reporting, and also carbon market opportunities, as well as the launch of the new Center for Green and Sustainable Finance. The center is a cross-sector platform which coordinates the efforts of financial regulators, government agencies, industry stakeholders, and academia in capacity building, thought leadership, and policy development. The steering group has identified talent and data as the priority areas of action. Accordingly, the center has established working groups to develop strategies and roadmaps to promote capacity building and develop data repository and analytics capability. I've been in some of the working groups, and there have been so many meetings, and they're working really hard in formulating their recommendations including stakeholder engagements, in order to find out where the pain points are. Earlier today, the steering group made a further announcement to support COP26 goals and reaffirm its commitment to develop Hong Kong as a green finance hub. In particular, the steering group welcomes the publication of the IFRS foundation of the prototype for the climate disclosure standard. This is going to be a comprehensive global baseline for climate disclosure standards that can provide market participants with clear regulatory expectations and improve the transparency, comparability, and reliability of corporate disclosures. The steering group also welcomes the publication of Common Ground Taxonomy report by the International Platform on Sustainable Finance. This is a key driver of convergence that facilitates the scaling up of international green finance flows. And last but not least, the steering group recognizes the associated opportunities for the Greater Bay Area and will continue efforts under its carbon market workstream in capitalizing on Hong Kong's unique position in driving global capital flows with a view to developing Hong Kong into a regional carbon trading center. And I wanted to make a point that it was 20 years ago that Professor Low started talking about the carbon market, and we're a bit slow in implementing it. In any case, we are working towards finalizing a study assessing and exploring the opportunities presented by both the compliance carbon market and the voluntary carbon market in China and overseas. Hong Kong and China's carbon neutrality goals will put pressure for companies to voluntarily set their net zero strategies and targets. The access to carbon offsets and derivatives is crucial to cover their unabated emissions on their pathway to net zero. With over 2,500 listed companies on our exchange, and the majority of which being in the mainland, we could lead and capture this opportunity by offering a suite of carbon products to meet this growing demand. And I really hope to share more with you soon through the steering group. Our Hong Kong SAR government has also been very supportive in promoting green bond issuances. Green bonds with a total value of 175.5 billion Hong Kong dollars will be issued by the Hong Kong government over the next 5 years. Some may be sold to the retail investors. The government has also issued a new green and sustainable grant scheme to alleviate some of the costs that may have to pay to the certifiers of green bonds and sustainable bonds. And I really encourage corporates who are thinking about green projects or sustainable projects to make use of that scheme, which will last for 3 years from May this year. Finally, I wanted to mention that we just announced the Project Genesis. The Hong Kong Monetary Authority and the Bank for International Settlements Innovation Hub Hong Kong Center concluded Project Genesis, which amongst others, concept tested the issuance of tokenized green bonds to retail investors in Hong Kong. 2 prototype digital platforms that bring to life the vision that an investor can download an app on their phone and invest any amount into safe government bonds, which would develop a green project. Over the bond's lifetime, the investor can not only see accrued interest, but also track in real time how much clean energy is being generated and the consequent reduction in carbon emissions linked to the investment. The HKMA will further look into the feasibility of piloting this issuance of tokenized green bonds under the government green bond program. Christine and I and some other were part of the advisory panel, and we were absolutely thrilled to see the prototypes being successfully developed. I shall pass the floor back to Judy. Thank you.
Thank you, Grace. Now let's turn to the private sector. Anthony, you are known for your role at the Friends of the Earth, but in addition to that, you also have really extensive experience in fund management. So could you please share with us, like from your experience, how are fund managers tackling the challenges brought by climate change?
Sure, thank you, Judy, for doing very extensive research, and also thank you for having us here today for SES. Now, as Grace has just mentioned, that the regulators, that we are seeing a lot of coordinated policy responses from various government authorities and also regulators in terms of what they will be expecting the participants from the private markets be doing. So I probably could also share a little bit about what asset managers and financial institutions are gearing towards these days. Now, obviously, we have seen what the cross-agency steering group has been advocating for, and we are sure that a lot of progress will be made, right? More expectations towards TCFD-aligned reporting for corporates and financial institutions, and also we are also seeing the SFC, the financial regulator, asking or upscaling the expectations to asset managers in disclosing their climate risks. I mean, these are all very important steps. And my role has been actually covering investment across Asia. So one of my jobs is actually to stay on top of the regulatory development across the region. I'm actually quite happy to say that, Hong Kong definitely stay ahead of the curve in this game. Now, the next question is, what private institutions can do beyond that, okay? So I'm sure it could be more timely that this panel as SES coincide with the COP26, which the climate conference in Glasgow, and one of the day has actually been dedicated for the finance sector, finally. And there are several new initiatives that are making further progress. The first acronym that I would like to share with you is NZAM, Net Zero Asset Managers Initiatives. Now, this panel is about achieving net zero. So I would happy to share with you, what is this about and what we could do about it. Now, asset owners, asset managers, a lot of financial institutions, insurance company, they are all seeing the importance of net zero, carbon neutrality. And for asset managers' point of view, it's not just about, like turning off the lights in our office or, doing other like recycling program, which Friends of the Earth will be the expert of it. But more importantly, we think about financed emissions. So the funds that we are managed, the portfolios that we are managing, where we are actually invest in multi-billion, market caps company. A lot of them are big caps in the world. And how to help or the advocates or facilitate these companies to be lower their emissions and subsequently lowered our portfolio emissions would be a very center to this very question. Now, what NZAM, Net Zero Asset Managers Initiatives, will try to achieve is that a lot of leading or large asset managers in the world came together to act as signatories and pledge. They have to pledge net zero targets for their own portfolio, and that's based on several very robust methodology, SBTI, PCAF. I'm not going to get into it, a lot of technical bit, but if you ask from my, personal experience, I would say that a lot of homework has to be done because that involves a few steps. Number one, we have to do the calculations, get the right data, make sure the estimates is right. And also in terms of the coverage of the carbon data. Number two, we obviously, when we're talking about funds and for a lot of big asset managers, you have got numerous funds, the numbers of companies in portfolio, we are talking about thousands, right? So and that's why when we have this data gathered together, the next thing is to look at what is the actual portfolio carbon calculation is, and then what would be the various scenarios that would be affecting us. That's step number two. Once we have done all those maps, which admittedly, we actually spend months about it. We finally have done the maths and say, you know what, we probably could do it, and in a very prudent way. And obviously, you have to convince the very, the big boss, right? So you have to get the investment committee and also from the board approval. And obviously, they are not carbon experts, right? So I think conveying the message internally is also a big part of it. But I think all in all, it's very exciting to say that the firm that I've been serving has been pledging, net zero just in the latest round of this NSEM initiatives into COP26. And this round, prior to after this round, there is a total of 220 asset managers in the world, representing $57 trillion of AUM, which is a very significant part of the funds in the world. So I think that would be a part one. Now, the second thing people would say is, so after pledging, so what's actually you guys do? So I'll give you a very short example. So we do something called engagement. One of the things that we'll do is we will talk to collectively institutions came together, meet with corporates, especially big greenhouse gas emissions guys, steel company, autos companies, you name it. And we would actually discuss with them, what's the decarbonization plan? What's the CapEx plan? Because for us, we understand financial metrics, but we want to make sense of their sustainability projects, and CapEx forward is going to bring real positive impact. 3 years ago, when we first involved in that engagement, it was a global initiative called Climate Action 100+. Basically, we engaged collectively with the top 100 industrials emissions company in the world. One of them is a North Asia power utilities company, right? We've got a big bunch of institutional investors as a group together to engage with them. We write letters to them. We try to ask for a meeting, etc. I think HSBC are also part of it, alongside with other big institutions. We were very kindly to be shown to the door, literally. 3 months ago, I am looking at the TV in front of the trading floor in my firm, CNBC and Bloomberg. The very same company came out talking about the new technology that they devised and the net zero plans that they've got. It's the very same company. We are talking about 36 months. And the thing is, you probably, wow, Anthony, I mean, like, these guys have done great. So what's next? The answer is there are actually many other companies in this part of the world, even Asia Pacific region. So some of my recent engagement work would be with Indonesian, Indian company, which obviously they're at a different stage of economic development, and hence, and additional, ESG, so social considerations involving in terms of their decarbonization plan. So the journey is still, a very long journey for us, but we are great that we are seeing some progress, and we look forward to work with other investors together. So hopefully the regulators will be happy with what we are doing. Thank you.
Thank you, Anthony. Ms. Fan, part of your work at HSBC is to develop investment strategies for private banking and wealth management clients. So do you see increasing demand from the clients on green investment, or how are your investment strategies adapting to this quickly evolving green finance market?
Hey, thank you for the question, and thanks for SES to invite me to join this discussion forum. I would like to share the perspective of private investor participation in the net zero transition journey. I've been in the finance industry for 26 years, but if I recall 10 years ago, when I talked to my clients about ESG investing, they thought that is such a remote and far away megatrend, and they didn't see this as a very imminent or a genuine investment topic for them to focus. I think COVID-19 is a wake-up call. And this also fundamentally changed the mindset of many private investors and drive the perception about the relationship with the environment and the world. And COVID actually helped them understand that our planet, our world is so fragile. So we have seen strong inflow into ESG investment solutions throughout 2020. And this trend continued to sustain going into this year. And there have been increasing demand from my clients to look for more sustainable investment solution, because now they really see the climate risk in their portfolio, because with all these public pledges made by major economies, including China, making the carbon neutrality commitment by 2060, they actually see this filtering through into regulatory action. And thanks to Grace sharing, all these regulatory change, these are actually a very real catalyst to drive the net zero transition, because companies would need to take actions to mitigate the climate risk. Otherwise, they would likely face consequence in terms of failures to compliance with the new climate regulations. And this would directly impact earnings outlook. This would impact the performance of listed companies. I think throughout 2021, investors in Hong Kong are fully vigilant to the market impact of regulatory tightening. So when we look at what's happening in China, and with the latest power shortage driven by the decarbonization control measures, I think more and more private investors see the needs to take a more sustainable investment approach in order to respond to the climate risk. Now, COP26 also raised the awareness of investors with more countries declaring their commitments to achieve net zero. Even India actually surprised the market by making their public commitment to achieve net zero by 2070. So in Asia, we are the regions that is the top carbon emitting region, as Asia alone contribute more than 50% of total global carbon emission. China is the #1 carbon emitting country. And to achieve the carbon neutrality goal, we estimate that from now to 2060, China is expected to invest 200 trillion RMB in green infrastructure and investment. And 2/3 of this investment would be in the power and industrial sectors. So I think many private investors are keen to look for growth opportunities in this mega decarbonization transformation, because this is going to be a multi-decade global trend. And there would be a lot of government policy support to drive the initiative of decarbonization. So in terms of key investor demand, there have been a lot of investor interest in renewable energy, in new energy vehicle and electric vehicle supply chain. Green technologies is also staying on top of investor interest agenda. And now COP26 also have 120 countries committing in the deforestation pledges. And this would also bring a lot of investor interest in biodiversity related investment themes. Not to mention that credit financing is a key source for funding of many decarbonization projects. So we also expect to see strong interest in green bonds and sustainable bonds investing. And this would be the key themes that will continue to drive fund flow in our opinion. And other interesting observation is that due to the catalyst from the COVID pandemic crisis, more and more private investors are now looking for ESG aligned and enhanced investment opportunities. So apart from companies which are directly involved in providing climate solutions, green technologies, they also look for companies, even companies in the traditional industry, which are able to build robust business model to adapt to the climate challenge. Companies that adopt best sustainability practice in order to strengthen their resilience to climate risk. And this is also reflecting an increasing buy-in in the financial market that ESG factors with ESG integration, this would help investors to pick the most resilient and good quality companies that would be competent to manage climate risk in the medium term. So we think the trend of ESG investing and the focus for the winners for in the decarbonization transition will likely remain a structural trend that will last for multi-decade. So it's not just a one-year tactical trading ideas. It's actually a long-term trend.
Thank you, Ms. Fan. The next question is for Sam. You have many years of experience in private equity and venture capital industry with a focus on sustainability and impact investment. So how has the VC and PE industry been responding to this changing investment landscape? And what industry are the investors pursuing nowadays?
Yeah, thanks for the question. And thanks for inviting me to this conference. As a private equity and venture capital investor in the sustainability tech arena, probably at the end, near to the afternoon of Friday, I will share some interesting example to you guys about what's the latest sustainability tech companies that we have invested previously and what trend they're actually projecting towards. Honestly, nowadays, I think there are a lot of private equity capital, or basically private capital looking for opportunities in the sustainability tech arena. After many years of money printing, there are a lot of capital hunting for return. And these days, sustainability has become something very, very hot. But at the same time, there are a lot of greenwashing traps, which the private capital are really afraid of. As a private equity and venture cap investor, we have invested previously in a lot of good companies in sustainability tech, but at the same time, fallen in some of those traps, which I would like to share a little bit more with you guys. These days, if you think about sustainability tech, especially focused on solving the problem of climate change and also like targeting the zero emission agenda, there are quite a lot of boring companies at this point of time. There are a lot of renewable companies, which in around 10 years ago, they have started coming up. For example, solar, wind, or hydro. Those are very typical renewable companies that are very much interested by private capital back in like probably 10 years ago. In different locations, they have been building and building, and they generate a lot of very stable return, just like a very typical infrastructure return, but they have an impact value where they replace dirty energy with clean energy. But as technology evolves, coming to 2021 this year, actually there are more technology coming in part, playing a really, really valuable part in the sustainability arena, which we find very fascinating in the last couple of years, where it actually contributes a lot in the combating the climate change issues. One thing that probably you all might know about climate change, the greenhouse gas emission is from food waste. One of the example. Food waste cause a lot of problem. If you landfill the food waste, it emits a lot of methane, a lot of greenhouse gas, which is even more problematic compared to CO2. Everyone knows about that. So food waste is not just something that left behind on your table, okay? Food waste start from very early in the value chain where the farmers grow the products and they sort it out and they during the whole value chain, they sell it to wholesalers, retailers, etc. And actually, there are a lot of waste along the whole value chain. For example, there are a lot of very ugly shaped food, which probably you guys haven't seen in the supermarket because the supermarket intentionally just take it out. They won't buy it from upstreams. And the farmers say, oh, no one buy it from us, and we'll throw it away. Every year, just the US alone, they throw like thousands and thousands of tons of foods, which is completely edible, which means you can eat it still. So what happened is there are a lot of food waste being landfilled, a lot of methane coming up, contributing to greenhouse gases. And interestingly, there are some companies thinking of new business models, applying some latest mobile internet technology, O2O stuff, and they try to change the game. Basically, they're a company trying to like talking to farmers, say, hey, can you get all of those ugly food product to us? What does it mean by ugly food product? Like, for example, radish or carrots with a few legs, or vegetables with a little bit darkened, or a little bit potatoes with a few heads. But then for sure they can be eaten. It's healthy. So this company go ahead and collect all those food from the farmers. And what happened is they got some credit from some health agencies from the government and say, hey, these all food stuff are completely edible. And they use O2O, sell it directly through the internet and get those people to buy it and deliver it directly to your floor. Okay, so what happened is in the beginning, people would doubt it, whether we can eat it or not, something like that. But if you look at the price, it's like 10% of the normal food, or 20%, only 20% of normal food. It's much, much cheaper compared to the normal food, but it's certainly eatable. And word of mouth comes up, and many people go to buy this food, and this company sales just shoot up and earn lots of money and raise a lot of capital from the private sector, including us, like venture cap and private equity, and they're raising C round, D round, going to get listed in the market. So what happened is these kind of sustainability tech company, what we see is actually generating a lot of traction from the private capital world, because not just it is very impactful, but because it also makes a lot of money. Because of tech, honestly, these days, the disruption has caused a lot of interesting sustainability tech company to be less boring, but it's more inclined towards making value, but at the same time, financial value and also impact value, both together. There are other companies doing same things in Asia these days, which is more interesting because they are even greener. I mean, they're even more early stage, and more private capital is looking at these companies. Other companies that we have involved in is also interesting, where also when we're talking about food waste, there are other companies that reduce food waste by elongating the perishable period of time of that specific food. For example, a specific banana, it would certainly perish in a specific week. But some scientists, some biotech companies, decide, look at the surface of the banana, extract some natural materials, and expand it, put it back, so form some sort of natural preservatives, perfectly healthy for human beings rather compared to the chemical preservatives, elongating the perishable life, the durable life of the food, and hence reduce much of the food waste. But at the same time, the supermarkets or the food chain is very happy because they, hey, I can actually sell it longer so that I can make more profit. Because 1 week I usually the food is perished and I flow it. But now I can wait for 2 weeks. Certainly some people is going to buy it. And that's why that these days a lot of sustainability tech generating financial value and impact value. And it's actually attracting lots of capital from the private world, both from the West and in the East these days. That I want to share. Yeah, thank you.
Thank you, Sang.
I actually have a question because, you know, I know the food doesn't look pretty, right? They've got three-legged carrots or whatever. Can't you make them into frozen foods? And if you cannot make them into frozen foods, can you not make them into like dog food, you know, because I have 4 dogs and they're supposed to have a lot of treats that are very nutritious. I mean, could you tell us a bit more about that chain?
Yeah, I think, Grace, you should move over to the private equity sector and venture cap. Exactly what you're saying is actually pinpointing some specific companies that's doing what you just said. Seriously. And there are companies using this kind of ugly food to crush it to become snacks. Like, for example, potato chips. You'll never know what this potato is, right? So there are European, American, and all Asian companies trying to like turn these ugly foods into something that is, you just don't really feel it, but it's actually having a certain impact value. And these days, the C generation, I mean, the younger folks really, really like this kind of thing, that you're eating something that's helping environment, combating the climate change issue with the chips on your hand. So that's something that's pretty cool. And I think a lot of unicorns is going to come up from that side. And in the next 5 years, hopefully we can, as someone in this field would like to capture some of the opportunity there. Thanks.
Just make sure you raise the finance on Hong Kong Exchange. Okay, thank you.
Yeah, that's for sure.
Thank you, Grace and Sam. So now we have an idea of the current situation of the net zero efforts from the perspective of the public sector and the private sector. So now we're going to move on to the second round of the discussion, the way forward, like what can be done in the future to achieve net zero. Grace, like besides the efforts you just mentioned under the capacity of the co-agency steering group, Hong Kong Exchange is also doing a lot of work in this aspect. For example, Hong Kong Exchange launched Sustainable and Green Exchange, or what we call STAGE, around a year ago. So would you please share with us the feedback so far on this STAGE platform, and what's Hong Kong Exchange's next steps to promote the green finance ecosystem?
Judy, I like you very much because your question is very good. It enables me to go and promote STAGE. So STAGE, I don't know whether you're able to find why the acronym is STAGE, is Sustainable and Green Exchange. So this is a platform that we launched in December last year. It was at the back of, you know, I was learning about greenwashing, I was learning about transparency, I was learning a lot of things, and I wanted to make sure that you know, investors, where they have put their money into green projects, that they actually see that the money is going to the green projects and that there is some sort of environmental impact coming out of the projects. So that's why we created STAGE, which is more of an information platform, and also an education and advocacy platform. You know, we talk about ESG all the time, and the Hong Kong Exchange actually started making listed companies to disclose environmental, social governance issues way back in 2013. But no one really took it seriously. You know, they will tell you the number of voluntary hours by the employees and the amount of donations. But actually what BlackRock and Fidelity, you know, these institutional investors want to know is that, you know, how are you managing any environmental risks or social risks and governance risks from your business? And so we literally changed our rules every 2 years to accommodate the disclosure that is necessary for our investors. And over the time, we have done that pretty well. I think we're now the pioneer of ESG disclosure in Asia, whereby we require the board to be involved. The reason why we wanted the board to be involved is because there's no more you copy mine, I copy yours, you know, kind of the, you know, the ESG reports. We wanted the board to really consider the ESG risks and how they can incorporate those risks into their overall corporate strategy. So stage, we wanted to increase the ESG information flow between investors and issuers. Second is to provide a market infrastructure for sustainable asset classes. And third is to provide an alternative to bank finance and private equity for SMEs. So if you go to Stage platform, which you can type HKEX Stage, the heart of it is that you will find a product repository, which as of today, we have more than 80 sustainable themed products. I remember that when I went to the board in June last year, that whether there will be any products listed, and they were really worried about it. And so by the end of last year, we already have some, 20 something products. But to their surprise, actually, issuers want to promote their green products. Investors want to see the green products. So that's why we have managed to attract a lot of green listings on the Hong Kong Exchange this year. So when you think about it, last year, December 31st, whole year, it was our record high. We had 18 green and ESG related bonds raising around 66 billion Hong Kong dollars. But for the first 9 to 10 months this year, we already have, I've got to look at numbers, 80. We already have 80 as of October 31st, and raising more than $222 billion. So, Hong Kong has become a very, very important listing platform for a lot of these green and sustainability issuers. I wanted to stress that the issuers coming onto Stage, I don't charge any fees. They just need to make a commitment to me, which is they will provide a post-issuance report to me every year during the tenure of the bonds to show how they've spent the proceeds and the environmental societal impact achieved as a result of those proceeds, which is an important objective for avoiding greenwashing. The other thing is that I also wanted it to be like an education platform. A lot of issuers are not sure about green bonds, and because borrowing money is not that difficult these days, and what's the benefit of doing a green bonds or sustainability linked bonds. So you will see that on Stage we have a lot of resources. We have case studies. We basically explain to various types of issuers why these bonds are being issued. So for example, CLP, I know some people will not agree with it, but CLP issued transition bonds from moving away from fossil fuel to natural gas. They need money to do the transition. They can't just change to renewable energies overnight. And I think so long as they're being transparent, they disclose how they use the proceeds, I think that's absolutely fine. The other thing is that there are companies will never have green projects because they're not in that industry. But somehow they can also figure out how they can issue sustainability linked bonds. So they can look at the environmental, social aspects, are there any targets they want to reach? And they talk to their bankers and issue sustainability linked bonds. And if they manage to meet the target, the interest rate, it's at a certain price. But if they fail, then the interest rate ratchets up. So it gives them an incentive to do well in terms of ESG. So we're seeing these types of bonds coming into the market. So coming back to your question, Judy, I think, having launched the first Asia multi-asset class platform in Hong Kong, although Singapore copied us right after, but we're still very confident that we'll build a better place, information platform for our investors and our issuers. So we are going to be launching Stage 1.5 as well as Stage 2.0. So all of this is to provide more data to the public and to educate the public about ESG investments. Thank you very much.
Thank you, Grace. Look forward to the launch of Stage 2.0. I would like to follow up with Professor Low. So you just mentioned the issues that will impact the net zero transition. And regional cooperation is also one of the ways that Climate Action Plan proposed to reach net zero goals. So like, what are the regional cooperation opportunities for Hong Kong?
Talking about regional collaboration, is that right? Well, maybe I can ride on this thing about food, right? We all understand food because we all eat, and Hong Kong is a really famous place for food. And also the region, right? The GBA region, Guangdong, you know, 食在廣東. Everybody talks about eating in Guangdong. So China has already started certain policies to reduce food waste, because this is actually a very major thing. Cost a lot of money, it's environmentally, it's, you know, it's not conscious in many, many ways. And things about food, not wasting food, it touches us, right? This is something that touches all of us. So China is already doing that. In Hong Kong, we are having a new beginning with waste, and food waste is one of them. So I think if we used our imagination a bit, this is why everybody sitting here, including our friends in government, can really be better coordinated. So I think the net zero world, if I can only drive one point home, is that we're not going to get there faster if we don't collaborate. So let's just take food as an example. So what is the level of food waste in Hong Kong and what we can do? So we can measure that and see what we can do. But when we look at the situation nationally or regionally, it is a much bigger problem. That means more opportunities for us to think about how to solve that problem. Now, the other thing is eating and technology and health has to come together. The messages we want is that these things become fused. So the companies that are going to come up with new ideas that you want to invest in is all along that chain. However, we also need public education and promotion, right? Why not for Hong Kong? We are the Sik Tin Tong, right? We're the shopping and Sik Tin Tong. And in the past, it's all about more and more and more. Come and eat till you drop, right? This is out. This is out in the net zero world. So why can't we promote Hong Kong as the eating heaven? Because we understand health, we can cook well, we provide food that are, you know, low price, as well as your 6-star restaurant. There's no endangered species on any of the menu, and the way that the food is prepared is very conscious, and from, you know, farm to table, table to waste. These are the kinds of general promotion we can all be a part of. So we need government policy, obviously, to be driving this. We need to work with the private sector. We need to work with the F&B business. We can work with, you know, investors and like yourselves, your clients at the banks, right? You know, this is the kind of major enterprise that Hong Kong can go on together that will, I think, have a good outcome where we, as ordinary people, we can be proud of and want to be a part of it. It'll be great tourism promotion when people can visit Hong Kong again. I mean, just imagine when you go to a restaurant, there are messages there that tells you that they are a low waste, healthy, net zero, you know, close to net zero kind of restaurant. You know, nobody minds all this funny looking vegetables because, you know, anything can be cool, right? What used to be not cool, today is cool. So we can make Hong Kong really a food center in every sense of the word that is really cool.
Thank you, Professor Low. So it's not just like regional cooperation opportunities.
But also with the region,
also,
right?
Yeah.
Guangdong, because a lot of our food comes from Guangdong. So we can make this whole region a really exciting place to eat.
Thank you, Professor. Social enterprises and NGOs are increasingly involved in sustainability or like green investment recently. So Anthony, would you please share with us your work at Friends of the Earth, or like what's the role of NGOs or social enterprises on net zero in the future?
Definitely. Thanks a lot, Judy. I think one of the things that NGO or nonprofits are also contemplating is that in the journey of net zero, what we could do apart from advocating and talking to the policyholders, etc. So a few things that we definitely do in terms of Friends of the Earth. We are very proud that we think that green finance education is very important. So we have actually developed a full suite of green finance education. We work with Hong Kong Youth Space, community college, we could reach the general public. We have got executive certificate program, which is for practitioners. We even go all the way to Europe and invite to work with the professional societies, industry associations there, and to bring the certified ESG analyst program all the way to Asia Pacific, the first stop being Hong Kong.
And just for information, Anthony is the first in Asia to get that certificate, right?
Oh yeah, because my company made me to do it back then. But it was a very good learning experience. Now I think to move beyond that, we are also contemplating, what we could do and contribute to sustainable investment. And one thing that we do it is because we look at Friends of the Earth should probably be celebrating its 40th anniversary in 2 years' time. And over the years, including when Professor Low was serving as the board governor and chair, that they have been working very diligently and saved some money. We've got a small piggy bank. So as a result, we are going to pledge to carve out half of our reserve to be dedicated for sustainable investing. So over the past year, we have been setting up, and when we do it, we want to do it like in a robust way. So we set up our own investment committee and try to, talk to many service providers, banks, asset managers. What we try to do is, you can imagine, right? If I talk to Christine saying that, like, thanks for all the money that you guys worked very hard and saved over the years, and now we're going to spend it, right? The pressure with it. So I also think that it would be something that for NGO and social enterprise, it would be extremely relevant for us. I mean, obviously, we have got our daily business and visions and the purpose that we are driving. But at the same time, the finance resources management is also a big part of it. So we have been invited by Salun, actually CSS, and been helping out in shaping a guide in terms of NGO reserve and investment. We are also want to showcasing, how sustainable investment could be done with it. We have been talking to service providers, and the next thing, get to another keywords with the fellow panelists have shared, is collaborations. We are actually working together with other nonprofits and charities, whether they are Salun members or some of the social enterprise here today, to collaborate together to come up and want to seed a product which we believe is, hopefully robust, because at the end of the day, it's not about maximizing return. Obviously, if we look at ESG investing throughout the last 10 years, both on academic and empirical basis, it's actually outperforming the traditional wider index with a good, risk-adjusted return, right? So, and I don't want to get into a lecture of a Sharpe ratio, but the nice point here is if we look back at what NGO has been doing with their piggy banks, what is the most favorite investment for NGOs? Time deposits, as according to the report that Salun has compiled 2 years ago. So one of the things that we think that into 2020 we are getting ready to mobilize our resources for success, as outlined in this panel. We are collaborating and looking for, financial experts, with the banks, asset managers, and to think about the right products that would be not just achieving, a good financial or good financial returns for our reserves, but at the same time, generating social impact. And by the way, Grace, we'll try to have it, we'll definitely look into the possibility to list it on the stage. If we got that critical mass.
Thank you, Anthony. So the next keyword is technology. So Sam, I know you are investing in green technology companies too. And I believe green technology will be a really key driving force for the net zero goals. So how could we mobilize private capitals, more private capitals to promote the development of green technology?
Yeah, I think the climate change itself is a very good driver to push people to allocate more capital into the green tech arena. Everyone's talking about business driver when we are doing investment, right, in different industries. But in the sustainability tech, in the green tech side, we have a natural business driver where you're expecting your climate to change more abruptly in the coming couple of years. And perhaps like in Hong Kong in November, we are experiencing 29 degrees Celsius today. And 5 years later, we're experiencing 40 degrees Celsius, or 10 years, or something even worse. And I think that is something that's alarming to all the private capital owners, like from sovereign fund, from family offices. And these guys, they can't really escape from the environment. So they feel the change, there's a pressing need for them to allocate more, and they are doing it. But I think the more deeper or more stronger push for them to allocate more resources in the sustainability tech or related sector is by education. Because I think quite a lot of them are scared already because they fall into a lot of greenwashing traps that probably I can share a little bit more with you guys. For example, we invest into waste to energy companies, like usually trash landfill, but it's generally lots of greenhouse gases. So people take the trash to burn it and to generate energy. So those kind of waste to energy companies. So these, it sounds like very, very, very good, right? You manage the trash well, collect it, burn it, and then just collect the energy, and that's pretty good. You manage the trash well, and then reduce the greenhouse gas from landfill. But instead, actually, there are quite a lot of investors being kind of hurt because they invest in some of these so-called environmental companies, which are turned out not very environmental. These waste to energy companies, when they burn the trash, they emit a lot of dioxin, a lot of SO2 stuff. In normal case, in the West or in many of different locations, developed world, they switch on something like a catalyst to convert those kind of emissions to make it clean when they emit the things out. But in some of the regions that we previously invested in some waste to energy companies and some region, when there are some people going, when, for example, we invested, go and check them whether they really deal with the emission, they do. But when we left, they switch it off. So basically, they save a lot of costs by using no catalyst in treating those emissions. So that's why people living surrounding those waste to energy companies are just getting a lot of lung cancers or all sorts of terrible things. So what happened is this is something terrible because the government finally checked it out and find, hey, you guys are violating a lot of rules. And who are your investors? Who are your shareholders? It's actually a whole chain of reputation damage. And a lot of investors who have a good heart from the very early beginning, that's, hey, I'm going to invest in a lot of environmental companies, saving the world, saving the climate, but turn out, hey, why am I being burned because of that crazy cost saving or that kind of money-driven management in a company. So there are a lot of traps, but we have a solution. So basically, we use a lot of other techs to tackle these kind of things. So hopefully I can share a bit more, but I think education to make sure the investment world know more about these traps is actually enabling more private capital to get into the arena.
Thank you, Sang. We are running out of time, so I would like to quickly follow up with Ms. Fan before we go into the Q&A section. So Ms. Fan, you just mentioned you've seen increasing demand from the investors on green investments. So like, are there a lot of options for these investors right now on green investment? Or how is there any gaps to fill to provide this kind of products to them? Yeah.
Over the past few years, we have seen a substantial increase in terms of number of sustainable investment solutions. So in terms of investment options for private investor, there is a meaningful improvement in terms of the diversity and the choice of investment vehicles. However, there's a key gap in terms of sustainable investment solutions platform. I think currently the ESG investment solution in the market is very much developed market centric. So they are mainly focusing on US or European opportunities. In the market, we actually see a short of Asia, China, EM focus ESG investment solution. I think this is partly related to the disclosure issue, and fund manager still feel not very comfortable about the ESG disclosure standard. But I think with the regulators in Asia, just like Grace have been doing a lot of work in upgrading the ESG disclosure requirement. I think this gap in terms of Asia, China, EM focus, ESG product solutions would be filled. In particular, I think it is important to look at the integration between international ESG practices with the local market knowledge. I think here, Hong Kong actually command a distinctive competitive advantage, given that Hong Kong is actually the financial hub with the strongest talent pool in doing investment and fundamental research on China and broader Asia. So with the rapid growth in terms of fund flow into ESG investment and green financing product, I think Hong Kong will play a very important role in terms of the green financing hub with the substantial talents pool to support the demand for ESG product development in the coming decade.
Thank you, Ms. Fan. So we now open the floor for the Q&A session. If you have questions, please raise your hand. And yeah, this lady at the front row.
Thank you, panelists, for such a riveting discussion today. My question is inspired by some of the conversations that were happening next door throughout the week at the Hong Kong FinTech surrounding tech, data, and ESG. So I'd love to hear the thoughts from the panelists here on what are your thoughts on some of the possibilities and the potential of tech on how it can disrupt the data lifecycle. So for example, data collection all the way to evaluation, analytics, to the way we make forecasts so that we can make better and more enhanced decision-making to ultimately drive ESG ambitions and targets. Thank you.
Thank you. Professor Low, would you want to?
Yeah, I think your question is on data mainly. You know, what kind of data do we have in Hong Kong? Now, one good step is the government has actually opened a lot more data than before that we can all access online. Secondly is, I think the universities are actually a treasure trove of all kinds of interesting data. Usually in university, because they are collected over time based on research, the data that is collected are fairly well organized and compiled. Because if you just have a mass of data, it may not be very usable. Now at HKUST, because we're a science university, a number of our scholars have been working on some environmental issues now for 30 years. It's our 30th anniversary coming up. So those kind of data could be very useful. And being a university, because we're publicly funded, most of the data we're happy to share. Now, not everybody will understand how to use that data. So my first point is, maybe there has to be some kind of coordination within Hong Kong, especially in the public institutions, which I will include the universities. What kind of data is available and who will find it useful? So, for example, if any of you were, if people were thinking of building products and technologies and so on, do go and think about talking to the universities to understand what they have. So I think that's number one. Number two is there are also just great research institutions in Hong Kong. And I just want to say this very quickly, because in Hong Kong, I have the privilege of going around, just looking at things at universities and other places. And I see really world-hitting stuff, right? World-hitting stuff. But they're not appreciated or that well known in Hong Kong. So I think if we also have the finance sector who are looking for investments, looking for the aggregation of some kind of products, I think there's much more that we can do locally. So again, my final point is, how can we be better aligned in Hong Kong, at least with the public institutions, so that we understand what is there, and then people's imagination will, will naturally expand and think about what can be done.
Thank you, Professor.
I want
Ms.
to
Fan?
add comments on the data questions. In fact, for ESG investing, I think the ESG data analytics demand will be crucial, because for more and more investor to buy in the ESG investment approach, this actually require the development of a more sophisticated green financing ecosystem, including more service provider, more development in terms of the data analytic technology to facilitate the ESG investment. In fact, more and more corporate are actually looking for ESG database because of the sustainability supply chain management need. Company wants to do more research on the climate risk management capability of their suppliers. And this would underpin the demand for ESG data vendor and service offering in the medium term.
Can I just say, don't be afraid, because no one knows how to do it perfectly yet. This is a whole entry into a new revolution. In 20 years, you are going to have these things about how to measure environmental sustainability, net zero data, more worked out, like we take it for granted with P&L accounts. But it's all right to acknowledge that we don't really know how to do it yet. So therefore, it is incumbent upon us in Hong Kong, because we want to build the capacity to actually work together so that we can go a bit faster.
I would just like to add that Christine's absolutely right. I mean, we have financial data that is audited, right? But I think don't forget the announcement a couple of days ago from the IFRS. We're going to have a global standard baseline for climate disclosure, at least. I mean, it's not perfect. It doesn't include some of the social stuff that I would like to see, but at least, we can compare apples to apples, oranges to oranges. And at some stage, I am sure these line items will need to be audited, because at the moment, when you go to the benchmark providers, you can get a lot of data. Can you trust the data there?
Thank you. Sam, would you want to?
Yeah, I think most of the climate change or net zero related data is in the private sector. For example, like in the energy management in buildings, most of the data is with the property owner or the property management companies. So why they release this data to you is because they think they will be benefit by doing so. So in the tech companies that we have come across, they provide some sort of energy management or energy efficiency softwares with, like these days with AI or IoT related stuff, implementing into those buildings, help them to lower energy usage so that they think they will save money. They will, if you use that software. So they will release the data to them. And then from one building by another building, then they will collect a lot of building data and then just trying to do the energy efficiency.
Can I say
software.
something
Yeah.
controversial? Okay. We all pay for water, right? You all get a water bill. And if you want water data, it's available because it's run by the government. The government has all the data about, our water use in every building, every household. We know exactly how much we are wasting and so on, right? Okay, what can we do with that data, right? That data is available. Secondly is, we do not have, even government does not have the full data on electricity and on town gas because they're private companies. There's no law in Hong Kong today that requires that data to be published. I've always argued in and outside government that this data is critical going forward for net zero. You need to know to make policy, and people need this data to understand what else could be done. So I get to the unpopular bit, which is, can we talk about how Hong Kong can access our own data, right? You have your bill, so you know how much you're paying, but how can we look at that data more systematically? Do we have to pass a law, or is it by negotiation between the government and the energy companies? The reason we want to have these conversations today is because we have to go for the net zero world, and we have to go for it faster.
Thank you, Professor. Anthony, you want to add on? Okay. I think we are getting close to the end of the section, but before that, may I invite each of our speakers to deliver your concluding remarks. What's your one advice for Hong Kong to achieve net zero, or what's the one key takeaway for us today? Let's start from Grace.
First of all, choose one day of the week whereby you don't eat any meats, okay? So it's a green Monday or Tuesday or Wednesday or Thursday or Friday. So that is already going to help with reducing carbon. Secondly is save water. Nobody talks about water other than Christine just now, but actually we're going to run out of water. And we just have to be very careful as to our resources. So that's the two messages I have.
Thank you, Grace. Sam?
Yeah, I fully agree with Christine's comment. Like, if the government and the private sector can do more collaboration, I'm sure like more data coming out because of legislation or anything, there will be definitely much more sustainability or net zero tech startups coming up to correspond to that. So I think let's try to do it hand in hand, like for the different stakeholders in the societies. I think we should do it together. That's all for me. Thank you.
Thank you, Sam. Ms. Fan.
My advice is that I think everyone in this room is a ripple of change. And I think everyone would have our parts to play in contributing to net zero. So I think each of us should formulate one plan how you can make a difference and contribute to the decarbonization journey, and then act now. No time to waste. Yeah.
Thank you, Ms. Fan. Professor Low.
Right. One is got to do something yourself. So pledge to do something to yourself about reaching net zero. And then I think the second thing is working together is really important. And if we want the energy data, we've got to get to the political class. It doesn't matter, the techies and so on, you can talk till flies can, die. But what you need to do is to get the message out there as a public policy issue, as a net zero driver. The time is now.
Thank you, Professor. Anthony.
I suggest everyone to take a look at something that we all have in our MPF account. Have a look and ask about your service provider, whether on the whole list of your MPF options, where's my green MPF options? And if not, when is this going to happen?
Thank you. Thank you, Anthony. These are really interesting ideas and useful insights. The transition to net zero economies requires not just the concerted efforts of the private and public sectors, but also the efforts like from every one of us as a citizen of the society. So I hope every one of you in the audience have noted some food for thought today that you can take away with. And let's give a round of applause to our distinguished speakers today. And also a big thank you as well to the organizing team, advisors and sponsors for making this session possible today. And that's it for today's session. Thank you.